G'day guys, Seeney here and welcome to another episode on the Australian Wealth channel. And today I'll be giving you an update on my latest investment that's worth $550,000. So thank you guys so much for tuning in. Make sure that you like and subscribe to the channel. It really helps to get these videos out to more people. And in this video, I'm gonna go into a lot of detail about my investment property that I have recently purchased up in Brisbane. So I was recently up on the Gold Coast and in Brisbane on a work trip doing some shoots, and I got an opportunity to go and see the investment property that we are currently building right now. So this investment property is in the Redland Bay region, which is about 30 minutes from the center of Brisbane, so not too far out. There's a lot of benefits to this area. It's close to the water, it's close to amenities, and of course it's close to the city. So this particular house that we are building is a 4-bedroom, 2-bath house. So not too big a backyard. We've tried to get as much house on the block as we possibly can. So I'm gonna go through the details of this property and why I think it's such a great investment and my bull thesis as to why the area is going to continue to grow in value. So now something that we've seen over the course of the last year is that we've seen that Melbourne in particular has been locked down quite heavily, and this has caused a lot of people to actually leave the state. And not only from Melbourne, but also Sydney, people are moving to more affordable and more equitable climates. So what we're seeing is that so much money has come from Melbourne and Sydney, where the property prices are really high, and they're moving up into Brisbane, which is a little bit more affordable. Your average property in Brisbane is around the 550 mark, whereas the average property in Sydney is over $1 million. So a lot of people that did live in Sydney have decided, well, it's a great market. How about we cash up and we move to Brisbane, where we can live so much better and have a lot more disposable income. And this is something that we've seen over the last year, and I think we will continue to see over time. So what's happening is that's drastically increasing the property prices within Brisbane and the surrounds. So we thought it'd be a great idea to take advantage of that opportunity. So one of the major advantages and potential disadvantages of real estate is of course leverage. Now property is quite different to stocks in the way that stocks are highly volatile and you can get wiped out incredibly fast if you end up using leverage. That's not to say that property is completely safe, but you have less chance of getting completely wiped out. You know, if you're making sure that you're buying in a good area, then chances are property values will continue to appreciate over time. So with real estate, my strategy in my 20s and 30s is to use as little of my own capital as possible so I can get into as many profitable deals as possible. If you end up putting a lot of money down on one property, it's going to slow you from getting more in the future. But if you're using more of other people's money, then that means that you have more of your own capital to get into more deals. Now, of course, you're going to be paying a little bit more interest on this, but if you've made sure that you've bought in great areas, then the capital growth is going to outweigh that. So on top of this, we've also opted for interest-only repayments, so that way that we're getting to keep hold of as much of our own capital as possible to continue getting into those deals. Now, this is not a strategy for everyone, and if you're looking to invest in real estate, it's worth talking to professionals in the area. The reason I've taken this approach is because I can definitely afford the principal and the interest repayments on that loan, but I've opted for the interest only purely because it's going to increase our cash flow in the short term while we build out extra deals. So by doing this and not putting 20% down, putting 10% down instead, it allows us to buy, 2 properties instead of 1 for roughly the same money. And that means that we get to enjoy the capital appreciation of 2 instead of 1 in this example. So the property that I'm building in the Redland Bay region costs roughly $550, and that doesn't include taxes such as stamp duty or other charges. So the Southeast Queensland region is really expected to boom, and there's a number of reasons for this, which I'm going to go through right now. So the first one is massive government infrastructure spend. So there's so many projects that are going on around this particular region at the moment. So government infrastructure is a really good one to look at when you're wondering what the potential appreciation of an area will be. The government expects that there's going to be a lot of growth in this particular area as people move from Melbourne and Sydney and other regions and come more into Brisbane. So as a result, they're spending a lot of money, which means that there's going to be a lot of jobs, which means there's going to need to be more housing in the area. And with vacancy rates under 2% at the moment in that particular region, now seems to be quite a good time to be building property in that particular area. In some parts of Queensland, the vacancy rates are even lower. I think in Hervey Bay, for example, it's 0.2% vacancy, which is incredibly low. So government infrastructure spend is a big one. The second one, which I've already talked about, is population growth. A lot of people leaving Sydney and Melbourne. And there's a lot more bang for your buck. And in fact, some of the most searched regions at the moment are the Gold Coast and Brisbane. So the search trends are headed that way. A lot of people have wanted a bit more space as a result of this pandemic, and they wanted to live not so much in units or smaller houses, and seeing they're spending so much time at home, they're looking to have a little bit more space. So that's another reason why people have moved to more affordable regions. So the rental market is getting tighter. So that is good when you're looking to be able to raise and increase rents. So for this particular house, 4-bedroom, 2-bath, we're looking at a rent of about $500 a week. I wouldn't be surprised if this is actually a little bit higher now, purely because there's so much demand for rental properties in the Brisbane region. So you can see here in the video that it's quite spacious. There's a lot of room within the kitchen and the living area. There's a couple of living spaces, which is fantastic. One at the front with the master bedroom at the back. Not too much yard to maintain, which is fantastic for rental properties. And while the yields aren't bad, we're investing here for the capital growth, which is much more important at my stage of life. We're anticipating roughly 7% year-on-year growth, give or take, a little bit over the next few years, which is quite ambitious, but I believe that it's definitely possible based on a lot of the trends that we are seeing and the demand for property that's happening in Brisbane and Southeast Queensland in general right now. So I'd be really keen to hear your thoughts and ideas on real estate investing. Do you have any thoughts in your mind where you'd consider investing? There's a lot of great capital growth going on in the regions right now. So I'd love to hear about it in the comments. So please make sure you like and subscribe to the channel. It really helps to get these videos out to more people so they can hear about real estate investing. And of course, before you do any real estate investing or stock investing, it's important to make your own decisions and get yourself really educated in the area so you know what you're doing. So thank you guys so much for watching, and we'll see you later.